wrapped up in my sleeping bag, looking out the window at Aaron's house as the sun is beginning to creep over the horizon. And the trees are silhouetted black against the emerging blue sky with the fading stars up in the sky. And I think to myself how much I hate Aaron because he's got it fucking made with this fantastic house of his, this nice little piece of property tucked away out in the backwoods of South Dakota. God, I fucking hate him. I hope he dies. I hope he dies of syphilis. Piece of shit.
One more observation before I go. You may have heard the news that Electronic Arts, which was already a shitty company to begin with, making bad video games, got bought out by private equity and the Saudi sovereign wealth fund. And let's throw some nepotism in there. Donald Trump's brother-in-law, sister, some relative of Donald Trump is in charge of a third acquiring company or has some kind of role to do with this. And I likened EA being bought out by private equity as, oh, great, a piece of shit that has mold growing on top of it now. This is wonderful. But then I looked up EA stock price, and not to bore you, but EA has been an average company. Its performance has been pretty flat. And I'm in it's a video game company, by the way, and I'm into video games, and the sales stagnant, just not. They keep making crappy games. Well, they got announced, and the price. Let me get the data here. It jumped up about, what is that? It jumped up 25%. It was at 170. Now it's up to the 202. All right, so it was a significant jump, but I said, well, what does that mean they're paying? Just me. What did you pay in stock price for each dollar in earnings, right? So you paid 200, it looks like it's going to be $200 a share, $202 a share. What do I get in return for that? And the PE ratio is 50, meaning they're paying the company that bought out Electronic Arts paid $200 to get paid $4 a share. Am I right on that? 54? Yeah. $4 a share. Meaning they'll get their money back if earnings continue to at least stay there, assuming they don't lose money. They will get their money back in 50 years. They're getting a PE, a 2% rate of return. That don't beat inflation. Now, people would say, Aaron, a high PE ratio means that they're expecting high growth. Well, I didn't see any high earnings growth in Electronic Arts before. Seems to be a dying brand. I don't know what the Saudis are going to do. It probably turn it not woke, hopefully. And private equity, all it knows how to do is cut costs, bro. Show me where private equity actually improved it, right? This isn't looking. My point was, you're trading at a PE of 50? A marginal company that is growing, you got a PE of 50? In the olden days, when I first started investing 401k IRA, shit like that, your PE was 15. Now it went up to 30, and then it went back down after the dot-com crash and the housing crash. But go back to 1887, I believe, or 1881, the average PE ratio of a stock price in the United States stock market was 15, which is a 7% rate of return. So you buy a share of stock, you'd earn your money back in about 15 years. So then I said, okay, I know because of retirement funds and inflation, and frankly, you investors got jack fuck all shit to do with this money, I guess. I guess you don't give a shit about making money or the underlying fundamentals. Like, you plain do not give a fuck. It's just closing deals, bro, making sales, bro, get my commission, bro. And then whoever the unfortunate investors are that gave you the money to go buy this at a PE of 50, you're gone. You got your bonus. You're out. Who gives a shit? So I wanted to see what different companies out there, what their PE ratios are. And so we got Electronic Arts. If earnings just stay the same, it's going to take you 50 years to get your money back. Let me pull up the other ones. NVIDIA. I know nothing of NVIDIA. Let's take a look here. PE ratio of 53. Really? 53? We're at 50, huh? All right. What's the other one? Microsoft, right? This should be an established old company. Shouldn't have too much growth. Microsoft stock price. PE of 38. I only have to wait 38 years to get my money back, huh? The dividend yield is 0.7%. My fucking God, you don't even get a cash rate of return of 1%. EA. Match Group. I want to see Match Group. I bet you there is no PE Match Group. And the ones that have Bumble and all that, the dating apps. A PE ratio of 20? Wait, you have a profit? Or is it Bumble? I'm surprised Match Group has a profit. And that's a sensible PE ratio, though your earnings are probably tanking. Hang on. Is Bumble its own company? Bumble stock price. Maybe this is the one I was thinking of. Oh, yeah. Bumble doesn't have a PE ratio because it doesn't have earnings. If I recall correctly, Bumble never posted a profit. And on your IPO, you launched at $75. Now you're down to $6. What's it like losing 92% of your investment? I have a business model. Okay, what is it? Women will make the first move. Oh, how many billions can we give you? I have to admit that was a clever idea. It was worth a shot. Not an IPO wasting billions of dollars shot, but it was worth a shot. All right, what else we got here? Coke. Let me see a normal, regular company like Coke, not a tech company. Your PE is 19. All right, that's a little more sensible. Amazon. Ooh, Amazon. Let's see what Amazon is. 33. Okay, you better be growing fast. And let me look at S&P 500 PE ratio. S&P 500 PE ratio. Here it is, multiple.com. The average stock in the S&P 500 is at 31, which aside from the dot-com and the housing bubble, what's this? Oh, that was the second tech bubble. It's stupid high. It's stupid high. Is this the new normal? Like, you literally, it's overvalued twice as much as it historically has been. People are paying. Look, you kids, I know this might bore you, but yes, you could see that you're paying more for housing or rent than your parents did, right? You could see the price per house. You could see it in price per groceries. You don't see it in stock prices because they always split the stock prices. But here it is. You're paying twice as much as the average American did in stock prices. So if you want to retire in 401k, you're paying $31 for $1 in earnings. So a 31-year rate before you break even, if it doesn't grow. And it's only been higher than that 4 times in the past. 3 times in the past. Not since 2000, was it? It was ever since they recorded this, going back to, it looks like 1870 something. You're paying $15 in stock price for $1 in earnings. Now you're paying 31. Money printer go brr. Come on. A PE ratio of 31. So for $1, I'm getting a 3.3% rate of return. That's equities? I know cash flow is boring. I know it's all EBITDA, bro. EBITDA. Bro, leveraging our synergies and DEI and AI and ESG. Oh, that was it. Oh, yeah. Here, I looked it up. OpenAI has reported approximately a $5 billion loss in 2024, forecasting a $14 billion loss in 2026. Do any of you look, I got a question for the investors. Do you care if you get a rate of return? Or you just get money, bro, money, bro, money, bro, money, bro, money, bro. Holy fuck. I looked it up here. AI has not made a profit. All the other AI investments haven't made a profit. I can't wait for all you corporations to replace human employees with AI and realize just what a fucking mistake that is. I can't wait. Yeah, apparently it just doesn't. Who gives fuck it? A P to the moon, a P ratio of 100. Why the fuck not? I did want to look up Disney because they are profitable, but they're just beaten down. Yeah, they're at a P ratio of 18. And then my favorite, this is not investment advice. I bought some shares in H&R Block as a joke because I'm on the Elkins accounting hour. And then I was up like 20%, then it came crashing down. I'm like, what the hell? PE ratio of 11. It's one of the main reasons I bought it. I bought a whopping $2,000, I think. A PE ratio of 11. I'm getting a 3.3% rate of return dividends only. I'm beating inflation or tying inflation there. And in 11 years, I get all my money back. Is there a value, or are value funds just not that exciting? There has been a disconnect between stock price and earnings or cash flow. You guys just plain don't give a shit. It's all about emotion and whatever article you heard, and it's got AI, and what? There is absolutely no fundamental valuation going on here, none whatsoever. What did I bought it like 40. Let me take a look. I've had it for about a year. Look at that. I bought it here. It went up. Now it's down. I'm losing money on the thing now. God, I was doing so good on that. Well, you see, brother, shut the fuck up. Watch H&R Block gets bought up by private equity. They pay twice the value. Now the PE shoots up to 24. I get a good payout, and then H&R Block is shut down because it was ruined by private equity bros. All right, there you guys go. If you want, I got a book called Bachelor Pad Economics out there. Get your financial shit together. We're talking about things like IRAs, paying off your debts, what to major in, shit your parents should have told you, but they didn't because they themselves didn't know, and that's why they're poor, yet still trying to give you advice. So go get Bachelor Pad Economics, the financial advice Bible for men and women who are bold enough to read it. We got 2 super chats here. Inquisitor Tibby, $5. Hey, Cap, you missed the last live stream about economics, but under Biden, we had this old fart by the name of Janet Yellen, who was all about modern monetary theory power. Yes, I you are correct. Yes. But it really, never mind. We could go over all the different Federal Reserve chairs and Treasury heads. Biscuit, $5. How is printing money not the solution? It's literally more money, bro. More money equals less poverty. Duh. I went to Carlson, so I know. The percentage of the American population who cannot explain why you can't print off more money, they intuitively know it won't work. Like they know there's something wrong, but they cannot explain, well, that just increases the money, not the amount of goods and services we need, right? If there's something to buy, or there's the same amount of shit to buy, but it's just more money, that's just going to cause inflation. But you all keep voting in the conservative, not conservative, that would indicate no inflation. Republicans and Democrats. Money printer code, bro. P ratio of like 1,000, bro. Inquisitor Tibby, 20 generous dollars, and believe that government spending and printing money didn't cause inflation up until our beloved God reality stepped in. And I'm pretty sure they kept it going just to make Biden Harris over the election hump part 2. I will have to, I stopped paying attention to economics and politics probably 15 years ago. I stopped giving a fuck. I didn't know what Yellen did or said, and I don't care. But if she actually thought that you could print off more money and that would not cause inflation, I never understood how people could be political. Like I remember her saying, oh yeah, she is a leftist Democrat. Like, how are you a leftist Democrat? Did you not pay the fuck attention to history or school? Let's just make money print to go burr. Another great female leader causing inflation. Yeah, good for you, Janet. Fuck. All right, that's it. I'll see you guys later. Toodles.